heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Tesla shares spike on surprisingly strong earnings and lofty sales goals for 2025.
And Nvidia announces a new partnership in India, more on its plans in the new massive market.
Plus an exclusive interview with Greenlight Capital's David Einhorn. But first, a focus on our top story, Ed.
Yeah, Tesla. Shares of the EV maker absolutely surging. In fact, if this 17% gain holds, it puts Tesla on track for its biggest single-day jump going back to March of 2021. So in the quarter, there was a lot that investors liked. Profit was ahead of expectations. Part of that was sales of FSD software. Part of it was regulatory credits. But they're also just lowering the costs of production. And then, Caro, as you know, there's the quarter that's gone and then Elon Musk's best skill, which is the outlook and keeping investors looking to the horizon.
And his best guesses, Ed. Here's Tesla CEO Elon Musk on his growth expectations in the next year.
I do want to give some rough estimate, which is I think it's 20 to 30% vehicle growth next year. Notwithstanding negative external events.
Craig Strudel joins us now from London. Tell us, are these estimates, lofty goals, likely to be achieved?
They're very lofty. I would agree with that assessment. I think we can't necessarily rule out the possibility that this is a company that won't actually increase deliveries this year. I think one part of the reason for this rally was Musk's optimism that they will have a slight increase, and this 20 to 30% outlook for next year. I guess I just would like to have a better sense, if I'm a Tesla investor, of how exactly they're going to get there, because we do know that this is a company that has been talking for months now about more affordable vehicles coming in the first half of next year, but we don't know what those are. We have very little indication from the company of any specifics around there, even last night during the conference call.
Slight growth was the call for 2024. And if you do the math like our colleagues at Bloomberg NEF did, they're going to have to deliver 514,000 vehicles-ish in the last 3 months of this year, which would be a record. Then there's the everything else bit. I mean, Musk was very clear about autonomous driving, but I felt that we got details, or at least claims and plans about ride-hailing, more than we got at the robotaxi event in the last 2 weeks. What did we learn, Craig?
Yeah, the robo-taxi event was sort of concepts of a plan, and this was a plan, right? Where we got a better indication of plans for putting together a ride-hailing offering that would actually deploy next year in California and Texas. It was a little unclear to me what exactly Tesla needs from the state of California to offer that service. Obviously, if he wants to offer it with the ability for people to not supervise the wheel, it's not really clear that they need approval, other than because of the fact that they need I guess they do need state approval for that, but in Texas, I think he sounded pretty assured that that's on the way. Whether or not, though, this company has the technology to offer that safely, I think remains an open question.
Musk said he'd be shocked if he didn't get those state regulatory approvals. And as you can see on the screen, when we sent those headlines, Uber and Lyft stock fell in after hours. They continue to be under pressure in the context of some competition in ride-hailing to come. Bloomberg's Craig Trudell in London, thank you very much. Let's get this sell-side reaction and bring in William Stein. He's the managing director and senior analyst at Truist Securities. You actually largely cover semiconductors, and you're sort of focused on this work around AI that Tesla's doing. There was something that jumped out at me in the 10Q that the CFO also mentioned, which was in the quarter gone. Tesla recognized more than $300 million worth of FSD revenues. Now take that and tell me the story it gives you.
Yeah, the story it gives me is that they released FSD on the Cybertruck. So for cars that they've been selling for a little while, they can suddenly recognize the revenue that they've already been paid for that technology that they've already delivered and continue to deliver. So that's great. And, look, I think FSD is an amazing technology. But, if you've read my reviews or if you look at any of the many reviews on YouTube or other platforms, you can see that there are known failure modes for this technology. It does not work in the sense that you can actually run it without a driver. And that continues to be a problem no matter what the 10Q says. This is a real problem for the company.
Have you seen any improvements, William, since last you were on to talk about some of those failings within FSD?
Yeah, so we've reviewed 3 different versions of this. I think I forget which was the last time I was on your show to discuss it, but certainly this version 12.5, which is I think the latest one that's broadly available to consumers, this is still one that doesn't work. Have there been improvements? Certainly. They mostly relate to the feel of the car, in that it feels more human-like, less herky-jerky. But along with that, I think there have been some documented cases of rolling through stop signs and other, let's say, minor driving infractions that are more human-like, but maybe not exactly what one is shooting for a driverless car in terms of trying to maximize the safety.
Okay. Not only, William, does he need to improve on the technology, therefore, it seems like you're still saying, despite the improvements. Ed, what's so notable is they need the regulatory approvals. This is where you drill in the extraordinary nature of one Elon Musk, because he's not only the CEO of Tesla, but he's also potentially going to have a political role and FSD regulation coming? Ed?
Yeah, so William, what I wrote about last night was Musk did not cite the election directly and he did not name Donald Trump. But what he did say was that if there's going to be a Department of Government Efficiency, he would like to work on nationwide or federal level rules for the deployment of autonomous technology on US roads. Which is as close to commenting on the election as I think you could get in the context of an earnings call. What did you make of those comments?
Well, I think he's just making some fairly logical comments about what would be the simplest, most logical way to regulate this technology. And at the federal level means you have one hurdle to clear instead of 50 individual ones. I don't interpret that as some, super partisan view of the world. It's just something that would make his life easier and the life of Tesla easier. That's all I take that as.
I think it's worth looking at shares of Uber and Lyft again, right? Because the news for me that jumped out was this confidence that next year Tesla will offer some form of ride-hailing in Texas and California. You've critiqued FSD. My question to you is, based on those headlines that came out on ride-hailing, are you better understanding the jump from FSD in consumer cars to this proprietary ride-hailing service in the future?
Oh, so a couple of things. First of all, I have a colleague that covers those ride-hailing stocks. I don't. But, I think what should be relatively clear is these issues, a ride-hailing service and full autonomy, are not the same thing. They are fairly separate. This company could turn on this ride-hailing service, assuming they get regulatory approval for it, without having FSD at all. And FSD is something that could come later and really has, in a way that they're certainly complementary, and having both of them together could result in significant earnings growth for the company. But they're not perfectly linked ideas. They are separate.
With William, the amount that they need to spend, whether or not they turn on that switch or not, and of course that ultimately means whether you have a driver at the wheel or not, I'm interested as to whether you think the upgrade, to an 11 billion capex spend is what needs to be invested right now by the business.
Oh, well, this is not a huge difference, right? In the prior quarter, they guided this number to 10 billion. Now he's saying 11. Wasn't a whole lot different from our model. We have a similar capex number next year. I think in a way, this might be a sort of off-the-run remark, but I think the biggest winner out of this topic is Nvidia. Musk emphasized how much they're spending on H100, those are Hopper generation GPUs from Nvidia, equivalent GPUs, and what they anticipate doing over the next year. This is a big investment in Nvidia. This training capability does not come from their internal D1 chip or their Dojo computer. It's going to be spent, at least in the near term, at least for the next year, more spending with Nvidia.
William Stein, great to have your take, Managing Director and Senior Analyst at Truist Securities. Let's turn our attention to a different set of earnings. IBM shares, as you'll see, now off by 6%, having its worst day since April 2024. It showed a slowdown in the numbers in consulting revenue that came out after the bell Wednesday, even though software sales, look, they did rise 9%. Now, the CEO, Arvind Krishna, told me a little bit earlier that clients are facing several headwinds, geopolitical, political, interest rate uncertainties. That should ease, actually, in the next 6 to 12 months. He also was talking about AI demand, saying it's solid. But the enterprise adoption is actually kind of being held back right now because of what William was just saying, costs, and ensuring that data and security is ready. However, here's what he said about optimism for next year. 2025 is going to be a good year. Despite headwinds, people want to scale and adapt their technology. I'm quite bullish on what 2025 will look like for enterprise tech. Ed.
Okay, coming up on the program, from Elon Musk's influence on technology to some more about his impact on politics, an important conversation and piece of reporting coming up next. This is Bloomberg Technology.
Check on some other earnings for you because shares are moving to the higher side, significantly so for T-Mobile, ServiceNow, both at record highs. Of course, these are stories that we get on the back of T-Mobile seeing strong results, hit its highest intraday level on record because basically they reported third quarter results that beat expectations. They're raising their full year subscribers as well. ServiceNow, this is a story of AI, artificial intelligence adoption as well. They're rallying to record on yet also strong results after the bell. And they're seeing a third quarter results that beat expectations, and they're giving a pretty strong outlook as well. Ed, what have we got?
We're going to go to a Bloomberg data deep dive into Elon Musk's online presence ahead of the US election. According to a large-scale Bloomberg analysis, the billionaire owner has been spreading debunked theories of undocumented voters swaying the US election and growing his influence in the process, making him the biggest promoter of anti-immigrant conspiracies on X, the social media platform he owns. I want to bring in Bloomberg's Sarah Fryer, who's the editor that leads our coverage of big tech. And this was a team effort of journalists and data experts. But I think the best place to start, Sarah, is what's the top line of the story? What is it that we report through that dense body of data?
Well, it was a really interesting finding, actually, that we have seen Musk on the campaign trail with Trump talk about these anti-immigrant theories he has. He's been promoting the idea that Democrats are shipping in immigrants to vote for them. So this idea of mass election fraud that he has been talking about on the campaign trail. And, you know, that seemed like sort of a fringe thing until we looked into the data. And it showed that immigration and election fraud and voter fraud is his top policy topic on X. He actually gets more engagement on that topic than anything else that he talks about. And it has become this driver of his feed, something that he talks about ever more frequently over the past year, ever since he visited the border and got more involved in the state of Texas. He's really become enmeshed with this idea of immigration leading to fraud. And what experts have told us is this narrative and the way that Musk is really laundering it for the masses is going to help Trump dispute the results of the election should he not win. So this is a very serious finding, in my opinion.
And the findings are serious in the nature in which you got them. You ran machine learning model basically on post to identify the subjects he was most often citing and talking about. 1,300 of Musk posts in 2024 really revolving around this issue. And I just want to get to the facts, therefore, Sarah, of what actually happens, because the facts are that non-citizen voting is incredibly rare.
It's incredibly rare. Non-citizens cannot vote for president. That is not a thing. There's a very difficult path to citizenship in the U.S. So this idea that he has been talking about is just not based in reality or any history that we know of. And this is something that we didn't just talk about in terms of the data. Our reporters went on the ground to Aurora, Colorado. Julia Luck was in Aurora, Colorado, talking to immigrants who feel like their lives are unsafe now because Musk and Trump have talked publicly about the danger of those immigrants. They went to Butler, Pennsylvania, during a rally where Trump and Musk were speaking together and talked to a different kind of victim, those who believe the misinformation that they are being told. So this is something that isn't just happening on the internet. It isn't just happening on X. It is happening in the daily lives of Americans right now, with the election just a few days away.
This is data journalism, and the team does a great job in explaining the methodology and also chronology of what happened. But I have to ask Sarah, have we heard from Elon Musk or X actually about our reporting and how they feel about it?
We haven't heard from X or Elon Musk, but we did hear from the Trump campaign, and they doubled down. They said Elon Musk is not wrong. They repeated some of the misinformation that Musk has endorsed on X. And one more thing I'd point out from the data, often it's not Musk himself saying these things. He will often quote tweet or just put a little emoji response to something. But with his following that's upwards of 200 million strong, he has incredible influence. He's actually the top influencer on the platform that he owns and has a lot of influence over the algorithm thereof. We also found that often his posts do not get fact-checked through the system that X uses to fact-check. So very interesting findings here from our data investigation.
Go read the full piece. Extraordinary. Sarah Fryer, we thank you. Now, Microsoft co-founder Bill Gates also has his eyes on the approaching US election. He spoke with Bloomberg editor-in-chief John Micklethwait about the role of innovation in addressing the world's most pressing challenges. That was over at Bloomberg New Economy at B20 in Sao Paulo in Brazil yesterday. He also weighed in on what Republican candidate Donald Trump's proposed tariffs would mean for American businesses and the global economy. Just take a listen.
We will suffer overall. Welfare will improve less. As not only if the U.S. puts tariffs on, of course, other people will put tariffs on as well, and the economic dynamism and speed of innovation will be significantly slowed.
Just to push you on that dynamism point, it's very easy to make the argument that this means higher prices for consumers, but this issue of dynamism, you've been involved in entrepreneurship, these things most of your life. If you have less foreign competition, less foreign goods, that must have an impact on it. I know it's back to a creed you've believed in, but in practice, is that argument possible to make to voters?
Well, we should find articulate politicians who can make the case. If you take most of the industries I think about, like inventing a new drug or writing a new piece of software or birthing a new climate technology, you have these gigantic fixed costs. And the fact that you can do that work and then sell it on a global basis means that everybody's getting, faster innovation and lower prices. And if you start to fragment markets because of either tariffs or regulatory barriers to that trade, it absolutely takes away the lower prices and high-speed innovation.
That was Microsoft co-founder Bill Gates, along with Bloomberg editor-in-chief John Micklethwait. It's time for Talking Tech, and first up, troubled IT company Atos said its financial restructuring plan has been approved by a French commercial court, paving the way for creditors to take control. Under the plan, Atos will receive $1.6 to $1.8 billion of new money beginning in 2025. Plus, shares of SK Hynix climbing to a two-month high, this after the company posted record quarterly profit and revenue, a reflection of strong demand for its memory chips used in Nvidia AI processors. Earnings also saw a boost boost from robust demand for enterprise solid-state drives. And Nvidia expands its AI infrastructure in India. CEO Jensen Huang has struck a deal with Asia's richest man, Mukesh Ambani, to build out a new data center using Nvidia's Blackwell chips. Here's CEO Jensen Huang.
In order to lead in artificial intelligence, you need to have AI model technology that India has. You need to have data, massive quantities of data. And using the last thing you need is AI infrastructure. And we're announcing that Reliance and Nvidia are partnering to build AI infrastructure here in India.
Let's get more on that story. Bloomberg's Ian King joins us. How significant is Nvidia's presence already in India, Ian?
Yeah, I mean, obviously, India has been a long-term source of very good engineering and math talent, so there's been a lot of software efforts there. They've been there for decades, but in terms of it being an end business for them, an end market for them, it's not particularly significant yet.
Just quickly, you and I have reported a lot. Jensen Huang has spent a lot of time in the last year trying to do deals at the nation-state level. I know this one's kind of different, but talk to me about the strategy, selling things outside of America.
Yeah, I mean, this is part of his world tour, right? He's in India now, he's going to Japan next, and I'm sure there are going to be other of these events scheduled around the world. He's trying to basically spread the use of his technology away from the concentration in the big cloud providers and get everybody involved, and this is the big push.
It continues to be a wild week in semiconductors. TSMC is top of mind. They identified a client that was funneling chips to Huawei and acted on it after a Bloomberg report. Any update? What do we know?
Yeah, I mean, there's been a lot of speculation about what was going on, a lot of reports and that we've seen, and finally TSMC have come out and said, yep, we found a customer who wasn't the customer we thought they were. They were supplying to Huawei, and obviously that's illegal, so we've cut them off. We don't know exactly how that happened. We have to assume that there will be further investigations of that the US government will look at that seriously, because this is something they don't want.
I have a feeling that story has more room to run. Ian King, we thank you so much. Coming up, we've got a great conversation. You don't want to miss it. Greenlight Capital's David Einhorn. This is Bloomberg Technology.
We want to now welcome our Bloomberg radio and television audiences right now. I'm Shanali Basak. Now, Bloomberg LP, the parent company of Bloomberg Television, is working with the Robin Hood Foundation for a stock-picking competition for $10,000 that will go to charity in order to fight poverty in New York. You pick a long and a short investment, and you can register through Monday, October 28th. You can sign up at robinhood.org. The competition is for charitable purposes only and does not constitute financial or investment advice. For more about the competition and his own investment choices, we are joined now by David Einhorn of Greenlight Capital. And perhaps first talk about this program for a minute, Pick a Ticker. You've essentially gamified charity. Why did you guys do it this way? You're closely involved with the Robin Hood Foundation. And what do you expect out of the program?
Yeah, we just thought it would be a little bit of a fun thing to do in conjunction with the annual investor conference that's been going on for 11 or 12 years. The idea is anybody who wants to participate can donate $10,000, pick a long, pick a short, see how it does over the next 6 months, and whoever wins gets to choose which Robinhood supported organization gets a chunk of the money.
Now, did you participate? Are you picking a long and a short for this game?
100%. Of course.
What are they?
Well, I'm not. The shorts people are allowed to keep confidential, and I'm going to keep mine confidential, but I'm going to pick Peloton, which is the stock that I pitched yesterday at the Robinhood conference.
Now, talk a little more about that, because from what I understand, you came dressed in full gear to make this pitch to the audience there. What is it about Peloton that you like right now? I understand that you said that it's undervalued, but what's the catalyst? Is it M&A or something else that you're looking at?
Well, I think there's a lot to like with Peloton. They have a large customer base that pays $44 a month and is extremely engaged, rides an average 13 times a month, and has very, very low attrition. So most subscription type models like this trade at really high valuations. Peloton has suffered over the last number of years because they thought they were going to be a much bigger company than they've turned out to be. Maturity has hit them a little bit sooner than they expected. And they had a cost base which was entirely based on, hey, the only thing that matters to us is revenues because, Wall Street values us on price to sales and stuff like that. And so, as I said at the conference yesterday, there's a lot of cost cutting for Peloton to do. Peloton probably needs to spend more time on the Peloton. And if they do that, the margins will improve a lot. And the stock is relatively inexpensive relative to other types of subscription model type of companies. Besides, they're going to get a new CEO who should be announced, sometime relatively soon. And in the worst case, if they're not really able to turn around, this is certainly the type of company that there's a number of larger companies, I think, that would be very interested in owning this if it came down to that.
David, I also want you to weigh in over here. It's interesting. As we speak right now, Tesla had come out with earnings over the last 24 hours. The stock is up more than 19% at the moment. It's been a stock that you have been short before. Wondering what you think about this stock at this valuation here and whether you would ever go short again.
Yeah, we don't really comment on our short positions anymore. We stopped doing that a few years ago. And so whether Tesla is a short or a potential short, it's not something that I'm going to discuss.
Can you speak to the valuation as it stands now and how it fits into the broader story around stock market valuations right now?
No, I'm really not going to go anywhere near that.
So let's talk about valuations more generally because, of course, the AI trade in general has been a very hot one. I'm wondering if you think that if some of these stocks have gone too far and how you're playing the AI trade.
Well, the thing is we don't have to, bet against things that seem like they're expensive when there's so much excitement around them. So these stocks are very high. There's a lot of enthusiasm. There's been enthusiasm for a long time. I think the market as a whole is really, quite expensive considering we're at a strong part of the economic cycle and we're about 23 times earnings. So it's hard to for me as somebody who actually pays a lot of attention to what I pay for things, to want to chase those things. We do have a couple of companies that maybe have options on AI coming our direction. So, for example, we own HP, which makes PCs. And PCs are due for a regular replacement cycle because a lot were bought after COVID in 2020, 2021. And we could have a better than normal cycle if AI PCs turn out to be a thing. But that only trades about 10 times earnings, pays a 3 and something % dividend, or spending 100% of the free cash flow, returning it to shareholders. So you get about 7% buyback. So we can see, mid-teens, high teens growth for the next couple of years, just as you go through a cycle, share count reduction. And for this, you're paying just 10 times earnings, which is, very reasonable from our perspective.
I totally understand that you don't want to talk about individual short wagers. However, will you kind of explain the thinking around short investing right now? There are a lot of people who feel very burned in the way that markets have really melted up in a large way. What does the environment for shorting look like to you, and what are the kind of parameters that you think around?
Yeah, we're actually having a pretty decent year in our short book, particularly considering how much the market has gone up. We made a change a couple of years ago in response to sort of the meme stuff. And what we basically figured out is that the right tail for your best short ideas has changed. So it used to be I'd want to put the most money in whatever I thought my best idea is, but your best idea is probably something that you think is going to go to zero. And that's where the crazy stuff goes on. So we've kind of flipped the short portfolio in the sense that our bigger shorts tend to be more boring. And our smaller shorts tend to be a little bit more exciting. And it's enabled us to maybe manage the volatility relating to, the occasional craziness that hits one stock or another, particularly in the more volatile, probably going to zero part of the short basket.
While we're talking about volatility as well, I know you this year had written to investors basically saying that it doesn't really matter who would win the election when it comes down to the markets more directly. But I am still really curious about how you're thinking about the election less than 2 weeks away, uncertainty around how long it will take to know what the votes really come out to be at the end of the day. How do you think about that uncertainty and investing around it?
Yeah, look, I don't know how to handicap it. The only real projection I'm going to make about the election is it's going to be held on November 5th. And beyond that, it's really hard to know. The election seems to be very close. And, I don't know whether we'll have a winner anytime soon. I don't know whether either candidate is preparing to concede if it's a close election. So we'll just have to kind of see how that plays. I'm taking a relatively conservative posture into the election. I view this as a potentially uncertain event.
Is there anything that could take off after the election? We hear over and over that investors are taking a risk-off tone before that time. So what starts to take off after?
Well, I think if you have a clear winner and it's the country, it's clear what direction the country is going to go. I'm confident that investors will chase whatever is perceived to be a beneficiary of whichever candidate that happens to be.
I want to get your macro view on this as well, because a lot of people are worried about the direction of inflation. You saw the 10-year really trail higher in recent days. Some people think it's a Trump trade. What do you think about the direction of travel for bonds, the macro markets more largely on the heels of this election?
Yeah, I think that we've moved from a secular deflation for many, many years into secular inflation. And we've had a reduction in inflation from the peak from a couple of years ago, but I think a lot of that has kind of run its course. And so there's a decent chance we should have inflation reaccelerate, probably as soon as the next inflation reading. As far as I can tell, there's still rents that have to flow through. Commodity prices are getting stronger. And I think there's some other indications, labor prices still going up. You see what's going on, for example, with the Boeing strike. These wage increases are relatively substantial still. So I actually think that the deflationary period is kind of, the disinflationary period is kind of coming to an end. And I think that you can see it in the inflation derivatives market and you can see it in the bond market. Additionally, regular growth is pretty good. We're running about 3%. So if we've got 3% growth and we've got, at least 2.5% and maybe rising inflation from there, that's nominal GDP of 5.5 plus. It's hard to see why Treasury bonds at 4% or a little bit better than that are mispriced, or why rates should come down from that.
Another bet I know that you have had on, David, it's fair to call you a gold bug. We've seen gold hit record highs this year, and I'm wondering how much further you think it'll go and why.
Well, I think that gold, we've been long gold for about 15 years. So there's nothing new about me saying something interesting about gold. But I think just to the point I was just making, right? If we have the Fed that seems dependent on trying to reduce interest rates, even as inflation, maybe bottoming and about to reaccelerate, that should be pretty good for gold. And I think you're beginning to see that in the price of gold. And gold has had a really strong year. It's been a big help to us.
Last question for you before I let you go. There's been a lot of conversation about how you've been thinking about value investing, whether the industry has died or not. But a lot of people are looking to get back into that value trade, particularly that Russell 2000 value trade. What advice would you give them?
Well, I think with so many professional value investors no longer practicing their trade or having assets to manage, there's just a lot less competition. And so you can find some pretty exciting values in companies that are, less talked about or less exciting than the ones that everyone wants to, comment on every day that trade at, fancy nosebleed multiples. You have a real bifurcated market, and we can find companies that are paying large dividends and buying back lots of stock. We're going to make a good return just from the company giving us the money, and we don't really care what other investors do.
David, we got to leave it there. Of course, that is David Einhorn of Greenlight Capital talking about his favorite long pick right now. We thank you very much for your time. Back to you.
Bloomberg Sonali Basak, thank you very much. LinkedIn CEO Ryan Roslansky says that even if you don't change your job will change due to AI. He sat down with Bloomberg's Haslinda Amin for an episode of Insight, where he talks about the platform's growth, the impact of AI on career search and development, and countering misinformation ahead of the US election. Listen to this.
A couple of the trends that we see right now are, across the board, just the need for, people to really upskill in what they're doing. AI skills, but also human skills, I think, are really in high demand across the board. for the first time on LinkedIn, we're seeing a lot of growth outside of kind of the core knowledge worker, and that's especially happening in India and Indonesia. So small business owners, freelancers are really starting to like gravitate towards the platform. So, the more people that join 7 per second, just the more insights we have across the globe. And it's really interesting to see those patterns. But, for me, really the idea that, again, if you're not changing your job is even changing on you. It's just a really important thing for people to grasp right now, especially as AI takes more shape in the labor market.
Right now, there's a lot of focus on the U.S. election and perhaps AI-generated misinformation. How are you countering that on your platform?
To a large extent, LinkedIn exists as a platform to create economic opportunity. What you share on LinkedIn is attached to your real identity, your resume online. So we don't face a lot of the issues that a lot of other platforms may face where there's not real identity. But to the extent that, we still have a lot of the same, trust in place across the board, through AI and human review, things get reported. But there's not a lot of political content on LinkedIn. In fact, in 2018, we actually, disallowed political advertising altogether on LinkedIn. So it's not really a place where, politics are happening.
LinkedIn CEO Ryan Roslansky, along with Bloomberg's Haslinda Amin. And meanwhile, Ireland's Data Protection Commission has actually just fined LinkedIn 310 million euros, that's $335 million US, for illegally processing the personal data of users within the EU to deliver targeted advertising. In a statement, Deputy Commissioner Graham Doyle called it, quote, a clear and serious violation of data subjects' fundamental right to data protection. LinkedIn said the case relates to claims from 2018 and believes it is now in compliance with data regulation.
This is what Tesla shares look like right now, up almost 19%, off session highs, but as it stands, on track for the biggest single-day jump since March of 2021. They beat expectations in the quarter, and a lot of this is about the business of selling EVs to consumers. Really big goals for next year, and they're getting more profitable at doing it. Let's talk to Jessica Caldwell, Head of Insights at Edmunds. And I want to start with this idea that they see growth in the automotive business of 20 to 30% next year. Really interesting. What did you make of that? And does your research and math support it?
Well, that indicates that they have a high volume model coming. I mean, in this market right now, I don't think any other car company is projecting that type of growth. So they have high expectations for this lower cost electric vehicle, whether it's the 3 or the Y, that's low cost. But yeah, that does not track with where the auto industry is heading. So of course, with Elon Musk, his promises, you never know exactly what that timeline is and if they'll actually hit those markers. But I mean, I think those sales growth projections have to indicate an incremental volume model for Tesla.
So if the math doesn't seem to quite add up for what they need to achieve this quarter that we're in, point us forward to next year as well, when we see a play of catch-up, and ultimately what price point they have to come in at for that up to 30% growth. Where is the demand from your perspective?
Yeah. So the interesting thing about his comments is the way he describes the car market, and he's done this on past calls. It feels like he assumes that everybody out there is a very pragmatic buyer. He says things like, if we hit the right price and the demand is infinite, something like that. He's talked about people are looking at cost per mile, and that's not the way people, especially in the United States, buy cars. I mean, if that was the case, we would not have luxury brands. We would not have large SUVs, sports cars. So, in terms of that actual volume, if there was a, $25,000 EV, would everyone still want that, especially if it looked very much like what exists today? I think that is probably the biggest question I have for them really next year, because people like to see new things. They don't like to see the same old thing that they've seen, but now just cheaper. If you want that, you can probably go get a used one. I mean, it's not new, but, it's in that price range.
If you're just joining us on Bloomberg Technology, Tesla shares are up almost 19%, while the S&P 500 is down a little bit, 0.1%. Here's a fun stat for everyone. The previous biggest gain Tesla's ever posted on a day where the S&P 500 was down was 7.5%. That's the state of play now, and we're up 19%. And Jessica, a big part of it is this autonomous future. How much have you looked into FSD, and how much do you think it resonates with the consumer at large right now?
I don't think it's for everybody at this point in time. I think people like the idea of a vehicle driving itself. I mean, who wouldn't? Who doesn't want that time back? But we're talking about the next few years. And are people really ready for it? I think you're going to have a group of people that they like it. But I think you're going to have a lot of opposition as well. People that feel like they're on the roads being subjected to these vehicles that they didn't ask for. So I think getting the public ready is a really big hurdle that we're not really talking about. We're talking about the technology and the regulatory and all of that. I mean, that has to be solved. But also, these are going to be in our streets, and I think there's going to be a lot of concern out there if we don't start talking about how this all works.
Okay, and regulation is actually something that Musk himself was talking about potentially being able to push forward if he does indeed get a role in the next administration. A lot of ifs within that, Jessica. Just go back to the facts of this quarter we're currently in. Do you believe that the targets outlined on the call will be made for this current quarter, let alone the 30% being looked out for next year?
I mean, it seems likely. It seems like this quarter will probably see some sort of increase in sales overall. We know that we've had a Fed cut, so interest rates are a little bit easier. And then also Tesla has been pretty aggressive with their incentives. So the fact that they are offering good deals out there is helpful. And then also when you just think about new vehicles in general, I mean, a new EV lease is the best deal. So I think that is working in their favor, but it's not necessarily going to make these massive sales jumps that they're anticipating next year.
Jessica, Tesla wants to change the relationship of an individual with cars. I have a Tesla Model Y. I believe Caro also has a Tesla. We both use FSD. But in the future that Tesla sees, we don't necessarily own our own cars. And if we do, we submit them to a fleet when we're not using them, in the same way we might put homes on Airbnb. You cover this industry. How are you going to cover it going forward?
I mean, yeah, that's a big question. Like in terms of personal ownership, do we own these vehicles? Because I do think that there are a group of people that they want their own vehicles. They're not going to fleet it out. They don't want their vehicle coming back in whatever state that it's going to come out in 10 hours when they need to use it again. But there are people that will use this. And I think that this is going to be a real income differentiator of people that have their own vehicles and people that can get around and they're not having to worry about a monthly payment or insurance, which has gone up so much recently just in the past year alone, and everything that is associated with car ownership. So it's definitely going to change, but I feel like it's going to be a bit slower than I feel like what we're promised. I mean, right now we're promised all these hopes and dreams that are happening in the next 5 minutes, but I think the rollout is definitely more conservative than that in reality.
Jessica Caldwell, Head of Insights at Edmunds. Great having you. Thank you. That does it for this edition of Bloomberg Technology, Ed.
Yeah, big focus on Tesla's earnings and a lot to recap on the podcast. You know where to find it online and on the Bloomberg platform. Shout out the team in New York and here in SF. This is Bloomberg Technology.